Good afternoon, good evening, or good morning, depending on where you're joining us from, and welcome to another episode of the AI Circle brought to you by the iFlip YouTube channel. I am your host, of course, Aaron Yoon, and joining me is none other than our esteemed Chief Investment Officer, Kelly Korshak. Now, I apologize for being late, everybody. We did have some technical back end issues. And right as I come in, I'm already getting questions about something that I was planning on talking about anyway, right? Something about this Zenvest notification that almost all of you got in the email and your inboxes. And Susan Lewis is also wondering, what the heck does all of this mean? So I am going to spend a couple of minutes to address some of this and clear up some of the confusion, just so that that we're all on the same page here. And then we're going to go right into the market updates with Kelly and all that good stuff, what you're really here for. Okay? Now, all of you may have received an email from Zenvest and maybe also from iFlip, both, I don't know, one or both, stating something to the effect of effective certain date, Zenvest will be terminating services, et cetera, et cetera. A lot of legal mumbo jumbo, right? Even if you read it, it probably went over your heads. So let me clear up what all of this means in layman's terms, as Kelly silences his phone there. Okay. Think of the analogy that I've used before that seemed to be pretty popular and resonated with a lot of you is, think of iFlip as a restaurant. And that when you go into a restaurant, you engage with your host, your waiter, you sit down, you look at a menu, and you order some food. Okay. What you don't see at a restaurant is who sources the food, who delivers the food, what goes on in the kitchen, and all that kind of stuff. So everything that you see here, you could talk to me, talk to Kelly. Kelly, you can say, is the person that writes the recipes for this iFlip restaurant analogy. We're all the front end stuff. The stuff that is happening in the back end, the stuff you never see, like where your tomatoes would come from, that's what's shifting. Your food is still going to be delivered to you the same. Your AI is still going to be cooking up the recipes and your investments for you. None of that is changing. Some of you have asked, is Zenvest the party responsible for executing the AI? Absolutely not. Zenvest is probably more akin to like the card,
the Cisco.
yeah, or like the credit card processing machine, right? It's like, okay, it's just a different way. Instead of using Square, you're going to use a different company, right? That's all that's changing. Your investments are not changing. If you're in a smartfolio position, it's not getting out and getting back in just because this change is happening. However, unlike the restaurant business where all you have to do is show up and eat your food and enjoy yourself, the financial world is a little bit more litigious and complicated. So we do need you to click the button and acknowledge that you understand what's happening and what's changing in the background. Your money and investments aren't getting affected, but you have to acknowledge that, like, oh, okay, instead of you're doing that, now you're doing that. Like, that's all that is. So hopefully that clears things up for everybody here. And if you have any questions, feel free to submit them into the chat. I will address them. If I don't get to them by the end of tonight's episode, because we did start a little bit late, I will. I'll either make a follow-up video or we'll reach out to you via email or text. One last thing here, I just want to give you a visual aid, because not everybody is going to receive the emails, right? Sometimes it might hit the spam folder. Some of you may have even opted out of certain things, right? So let me also show you the way that everybody is going to be able to make sure that they click the button and ensure that put all this behind us. That's what we all want. We just want to put all this behind us. So earlier today, this update went out and hit all of your web apps. It also hit the iOS mobile app. So if you prefer mobile and you're on an iPhone, go ahead and download the latest app. You should see what I'm about to show you right now. Okay. When you log into the app, you should see this pop up. And it says important account update. It's basically saying we're going to upgrade our backend stuff, our backend introducing broker. We're moving away from Zenvest. We're moving to optionality. Zen out with the old, in with the new. Okay. Optionality is the new one. Okay. And so you would just click learn more here. And then it would bring you to a screen where you can just opt in and click. There's three options. And option A is the one you want because that's the one that allows you to stay with iFlip and continue to let AI invest for you. So option A is the one that you want. There's more legalese there if you want to read ahead even further for people who like that kind of stuff. But really, option A is what you want. Okay. Now, so click learn more, click option A, and you're done. That's it. Everything is behind you. You don't have to. You don't have to deal with it anymore, and that's the end of that. Now, we did. I'm just going to address a couple of questions here before we move forward and get Kelly's updates. If we wanted to do the way we've been doing, do I click on option A? If you want nothing to change, right, and you want to stay with iFlip, option A is the way to go. Okay. You can click the link that we sent you via email. That's one convenient way of doing it. But not everybody got that email. We've been getting some calls and stuff about like, oh, it hit my spam or it didn't get delivered. So I just showed you another way of engaging with it, which is inside of the app. There will be a pop-up when you log into your web app or iOS app. Android is a little bit behind in approving this latest update, but it should be in a couple of days. Android users should be up to date as well. Okay, now we do have this question. Who is the responsible party to deliver tax information? This, I don't believe, affects that at all. So you'll still get that from Velox Clearing, but I'm not entirely sure. So that's something that it is.
It is going to be Velox. I think what everybody needs to know is, let me chime in on this.
Sure. Thanks, Kelly.
Make it easy for everyone. Flip Investor bought optionality. Flip Investors now has its own broker dealer. With our own broker dealer, optionality, we are moving from the corresponding broker at Velox that we used to implement your trades, to the broker dealer that we bought to implement your trades, but they will still go through Velox. So yes, the tax authority is identical. Mm-hmm. It will be Velox, and Velox is the clearing broker. Velox is where all your money sits, and that's how we execute trades. The only option you take when you do A is to say move from the existing corresponding broker, Zinvest, to the new one, optionality. Why? Because Flip bought it, and because it's a Flip broker dealer, this is definitely better for you. Everything is exactly the same. Aaron's metaphor is actually very good. I didn't think of it.
Oh, thank you, Kelly.
But I like the idea that it's exactly right. It's the food vendor that has changed. The vendor is now optionality and no longer Zinvest. However, both of them live at Velox. So Velox is the one that creates the statements. So the statements will be the same. Everything is the same. If you choose option A, if you choose anything else, basically your account will close. So don't do that.
Yeah, we didn't want to focus on that too much because I'm assuming everybody on this call wants to stay with us. Like
I would hope so.
Yeah, I would hope so as well. Journey Majestic, Curated, Luxury Travel, yes, business channels follow us as well, I guess, is just confirmed that option A is now clicked and confirmed. And last question here, and then we'll move on to market updates, is if you're not seeing the pop-up, make sure that you're on 4.2.0. If I'll just bring this back up here, if you look at the bottom left, you are that version is 4.2.0. This update also just went live like a couple of hours ago, so it might not propagate for every single user because we have thousands and thousands of users. So we do request a little bit of time on the web app for it to propagate. But the iFlip, the iOS apps, excuse me, should be up to date right now. So check that out as well. All right, now with that out of the way, let's get into some market updates. But unfortunately, you have to deal with me for one more minute with the disclosures. I know we just got through a bunch of legal mumbo jumbo. I have a little bit more left for you here. Just bear with me as we go through this. Disclaimer: iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for financial purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure that the iFlip portfolios you select are suitable for your investment profile before trading in a live brokerage account. All right, I can catch a breath and pass it over to you, Kelly. We have a lot less time than we usually do. Hopefully that's enough. Floor is yours.
We're going to go a little over today, everybody, because there is obviously a lot to kind of go over. Besides the introduction of being late, sorry, that was my techno. I wasn't able to sign in, and we don't know why. We figured it out and went a different way. That's why we were late 8 minutes. I'm very sorry. It's not my computer. I guess it's the password that I use every day, but it's sort of like speed dial. You don't remember it after a while. Let's get into this real quick. Market sold off again today. I think, as most of you know, the AI has kind of kept us out of the market for most of the year on most of our portfolios. We do have some portfolios like red oil or conservative or balanced that did participate this year. However, most of our portfolios that people are in were really shy, and they were mostly in cash for a lion's part of this year. Here's why. I don't know if everybody, hopefully you can see the screen. It's a little, let me get it so that we can have better bars, make it thicker. Hopefully you can see this. Today, the Dow only closed down 17 points or so. However, this is actually the aftermarket now. Well, the aftermarket, we're also selling off again. We are in the middle of a decline in stocks. I think everybody knows it. And it is no wonder. We have two wars. We have a discombobulated Congress, although they did seem to get together today in the House. But that's not going to make any real difference. We have problems in the China Straits. We have the potential of the Middle East war breaking out to a direct war with Iran. We have high rates. That'll be our trivia question today. We have a strengthening dollar. We have high oil prices. We have a dysfunctional government, even when it is united, at least with the Speaker of the House. Regardless, we have a deeply divided country. We have a country now that apparently, from within inside of our learning institutions, that we have people that are siding with terrorists. That is different than anything in my lifetime. I think most investors that are a little bit older, which is generally the lion's share of them, recognize that all of these things, any one of these things could be a problem, but the market could shrug off. But the sum of the parts is just overwhelming. That is why the market is going down. This market, as everybody knows, has been held up by now it's called the Magnificent Seven. The Magnificent Seven, if you remember the old movie, were just 7 people that defeated a bunch of bandits down in Mexico that I remember when I was a kid. It was a great movie. However, the Magnificent Seven today are the tech stocks. And if we look at those tech stocks, let's take a look. Yesterday, they had a dead cat bounce. But here are the Magnificent Seven. It is Apple. It is Amazon. It is Google. It is Meta. It is Microsoft. It is Netflix. It is NVIDIA. These 7 stocks literally held up the entire market all year, and they have yet to give up the ghost. Why? Each one of those stocks has a piece of artificial intelligence, the buzzword of 2023 that has kept the market afloat. The idea of ChatGPT is amazing at one level. However, those are the 7 deliverables that can offer it. Everybody rushed to buy them, thinking this is the new world. It is. But this reminds me of early 2000, when I remember at that time, technology was, at that time too, we had the tech bubble. Technology was going to overwhelm the world. The NASDAQ went up hundreds of percent. And then, of course, came crashing down 83% in 2002. Why? Because the values were just way too high. It was way out of proportion. And as deep as artificial intelligence is deeply important as it will be in the future, that doesn't mean that it's going to be monetized right now. And that's why these multiples are high. I remember some of these pundits are coming out as, for example, this company, NVIDIA, was at 500. Mark Mulvaney, one of the better analysts out there, came out and said 650. Well, that's up here where you can't see my mouse. Well, in the meantime, it's just gone down 20%. So people, it's not really good to try to get the last 10% of a move when there's 30% on the downside. The market is way overbought. It continues to be overbought, and that's why it's being sold. Why? Because enough of the bad things that exist around the world are coming to roost at the same time, and the market just can't dismiss all of them collectively. That is why we're moving lower. I suspect, as I've been preaching most of the year, that the market will go down even further. This is not a time to be hero. There's a falling knife. It's sharp. If we try to catch it, we will probably get cut badly. There are no bargains out here. None of these tech stocks to me are bargains. I'll look at Apple. Apple here is at 170. I think it goes to 130. Why? Look at 130. If you can see my chart, that's the COVID lows. This is COVID area right here. Sorry. Let me go back to the COVID lows. We're going to go to 130. There we go. COVID lows. We're going to go to 130 on this stock. Why? As I think I mentioned before, they have a chance to lose 1/3 of their revenue if we have any further problems with China. 1/3 of their revenue means 1/3 of their stock. Forget AI. And AI is the bubble on top of the value. These stocks can't just dismiss a declining market share. This is what happens when the world bifurcates. So this is a wonderful company. I've loved it for years. I still will like it, but I think it can go much lower. Most people would probably think I'm insane, but they thought I was probably insane when you think you should buy it at 200 a share when they think it's going to 300. I'll take my chances that I could buy it more around the price of 130 a share. And it's not unusual for Microsoft to have a 40 to 50% correction. It's happened many times. And when that happens, we will be buyers. In the meantime, let's look at another stock. Here's Amazon. So again, these are one of the Magnificent Seven. It's up on the year, but it just broke key support today. Doesn't look good to me. Look at Google. Look at this today. So today, Microsoft came up with this incredible earnings. It'll be sold, and by the end of the week or next week, it'll be lower than it was yesterday. Let's look at Meta. This, again, these are not good-looking charts. So I'm looking at it from a charts perspective, not AI. AI, we already know. We're out of the market. Meta. Stock is held up, but it's under now 48 states are suing it, thinking about children being hypnotized into buying, similar to the tobacco companies in the 60s. Again, with so many lawsuits, you can have Meta, someone else can participate in the last 10% up. I'll take my chances and bet that it'll go down 50% before that. Microsoft, awesome company. Here it is, the one stellar holdout of the day. That's the reason why the Dow was only down like 100 points on the day. It's because of this one stock, one of the Magnificent Seven, held up the whole Dow Jones from being up, down only 100. If it wasn't up on the day and it was just flat, the market would have been down 370. How about that? 370 it would have been down, not just 100 points. It added that much to the Dow. That tells you that the influence these tech stocks have is just massive. In general, the tech stocks today, I think we saw it, they sold off 2.5%. That's with Microsoft up. If Microsoft was normal, it would have been down almost 4% on the day. This is a sell-off. This is how it looks. This is how things get worse, not better. This is not a dip to buy. Here's why it's not a dip. 2 reasons. Let's look at that 10-year note. Here's the 10-year note, and that'll be the trivia question. This down here at this price, these are the futures for the 10-year note. They're down 20% on the year. Sorry, 10% on the year. Sorry. 10-year note hit 5% and it bounced. Of course it bounced. Anytime people saw that 5% yield, it went from 5.04 all the way down to 4.82, and that was yesterday's dead cat bounce. Today, it gave all of that back up. And tomorrow and over time, it's going to go well above 5%. I suspect the next move is 5.25. And I see the market, I see the Dow down conceivably this year. It is now, well, the Dow is down on the year, everybody. Just so you know, let's go to a year-to-date chart. Here was where we entered the year. We are right there right now. We are down about 1% on the year. So for such a great market in 2023, the Magnificent Seven in AI, why is the Dow down? Let's also look at it. Another reason why I think the sell-off continues, the dollar. This is the dollar index. Now, if you remember last October, the dollar was here. The dollar was much stronger than it is now. And beginning last October, when the rally began of the stock market, it's no coincidence, it happened at the same time the dollar hit its high and it backed off all the way till July. Guess what? That's when the stock market topped. July, the end of July. Since middle of July here, when the dollar bottomed, it has now been on a rally. Why? Because our interest rates are going up. It's better to have U.S. bonds if they're yielding 5%. It's a good thing to have. So now we have the opposite is occurring. The interest rates are going higher again, and and the dollar is getting stronger. That is the difference, is why the stock market is going up. Those two things reversed trend last October. And that's why the stock market went up. But they are now continuing their trend. Higher interest rates, stronger dollar, and that's why the stock market's going down. Let's take another look real close at the S&P index. Very important. Again, all the way to the left side of my screen over here, everybody, was the beginning of the year. We are still up on the year about 8% now, only 8% on the market. It was up 19, almost 20% at this peak high right over here. But if you look closely, over here was the end of January. We are now, if it wasn't for January's rally in the S&P, we'd be down on the year. The whole year has been lost literally over the last week. And certainly it's been lost since the end of July, when the dollar bottomed and interest rates resumed their higher trend. It is no mistake. And if you just look at something even worse, look at the Russell. The Russell, of course, represents the broadest view of the economy, 2,000 stocks. It holds all the large caps, which are basically the S&P, the mid caps, and some of the smaller caps, not all of them. This index is down on the year. Started here, and it is now from 1,800 down to 1,650. I look at that as down 9%. If we look at anything but the Magnificent Seven, the market is lower. Look at the banking stocks. New low today in Bank of America, down on the year. Look at Schwab. Remember this down here when they had the banking crisis? Had a good rally. I like Schwab. Now it's back down to below the banking crisis. Look at JP Morgan, one of the better stocks. Again, it's marginally up on the year. My favorite one is a company that I wanted to work for, but I worked for the other guys, Solomon Brothers, Goldman Sachs. Company years down in the year, making new lows, looking to get rid of their manager. For the first time ever, they'll replace a Goldman CEO. That's the first time ever. Only things holding up, folks, oil. It's holding up. Why? It doesn't look like it's up much on the year. Yeah, it's only up about 8% in stock. However, Exxon for most of the year was paying another 5. So guess what? It's up 13. I like it. The pipelines that I've been liking, well, they're up 30%, and they've been paying you from the beginning of the year 7%. So guess what? These things are up closer to 35% on the year to 37% total. Increase in appreciation in value and dividends. When I look around, let's take a look at the worldwide markets. We just have to go further tonight because it's important. Let's look at how the world is doing. Let's look over here and look at the French market. I'm going to look at the French CAC. So let's go to year to date. Let's see how Europe is doing. Same thing. It's up only about 3% on the year. Didn't go anywhere. And by the way, just like us, since January, it's now down on the year. So if you didn't catch the first 20 days of January, you're down on the year. Let's look at the DAX. This is the German market. Oh, same thing. Up about 2.5% on the year. However, below the January numbers. So if you weren't in the first 20 days, you're down on the year. Let's look at this one here. I think this is the CAC. This is the Great British market. Definitely now down on the year. And if you did the January thing, believe it or not, January of 2023, you made your money, you should have left. And we all should have gone home. The market was overbought in January, and thus really why the bears came out in January saying that the market wasn't going to do good. And by the way, folks, I was one of them. I remain one of them. And it was very difficult to hold those thoughts when you saw the Magnificent Seven do their magic. But I think we might be coming to the end of the Magnificent Seven's hold on power. If the Magnificent Seven, for any reason, and war would be one of them, a deeper war, these things could give up the ghost in a massive way. Massive. And that would mean the stock market, given the hold they have on the market, could go down appreciably more. It is a very dangerous time to be in the market. I've been opining all year that there's a good reason to be in interest rates and take your 5% and just hold on to it and wait for bargains. The good news about our software is the language will do it for you. Let me show one other chart and then we can get to trivia. But I think everybody on this call should recognize my bearish tone. I am everything but pounding the table. I'm doing everything but pound the table. And again, these are simply my opinions, but it is kind of noteworthy. If anybody can see this chart represents how the AI works. I've shown these from time to time historically. I'm going to make it as large as I can. This is, again, just the S&P 500 going back to the October lows over here. If I bring it and just look at this year, here we are. Where is this year? We got to make this bigger, bigger, bigger. There we go. Here's January over here. This is the start of January right here. We still show that we're up on the year. Here's the 8% up. It doesn't have today's price in it. Notice how most of the year, you see, if you can see a little tiny red, like little dots, it's in there, it actually is saying AI, AI, AI. What that means is the AI recognizes that we should be out. What is the AI really doing? The AI is really a mathematical interpretation and a model that is learning from every day that goes by to reinforce the decisions it makes. It has been in this bear mode, which meaning don't buy the market, even as the market went up. If you remember earlier in October, we wiggled a little bit. We had a trade that lasted just one day. This is when the AI kind of turns off for a day for whatever reason. And we were in a position algorithmically to actually buy the stock. That's why we did. And then the very next day, the AI said, no, we don't really want to be in this, which means some data point occurred on that day that gave the AI a window to say it didn't know what to do, but then it literally reinforced itself the next day. That's periodically why many of you might have noticed that periodically we will buy a stock, hold it for one day or two, and then get out. That's when the AI is changing its thoughts. And if it does that, that means that we're at some kind of a pivot point normally, and we were. And obviously we're happy we didn't do that because the market is much lower already than if we had held that trade. We would have had a little rally actually had we held it, but we didn't. We took a small 7-point loss in the S&P, $7. And then the market started to go down. We are now, by the way, at new lows down over here where my mouse is, if you can see it. So where does the market go and what does the AI do? The AI is going to remain on because the AI is looking at fundamental data. That is not changing. It is getting worse. However, there is a point where it will buy. That point, however, is very much lower. It would take a large, quick sell-off of approximately 2,000 Dow points for that to happen, or basically another 80 S&P points. If we go down 80 S&P points in the short run, which is a huge sell-off, folks, we were down 50 today, but we could be down another, not 80, another 80 SPY points. That's literally approximately through two to 300 S&P points.
Right.
That's a lot for us to go down. And that means we would be buying the market literally down here. It'd be around 3,800 in the S&P. We're at 4,100 and something now. So that takes about a 200 to 300 point move down. We would be buyers there. And that would only be for a bounce, folks, with a tight stop. That's the way I know the algorithm will trade. I can't tell you what the AI will say there. My instinct is it will say no, but the algorithm could possibly override it for the bounce. But right now, I think most of us should look at their portfolios and see that if you're in conservative or balanced, those are paying dividends. They're weakening, but they have oil components in them, so they hold up better. We're good there. If you're in the SPY Plus or SPY I, you're pretty much in cash at this point, and you have been. You're definitely good there. And what we're hoping for, as much as I don't want the market to be hurt or go down, what we're really hoping for is some kind of a sell-off that gives us an opportunity to buy. Hopefully, what I would like to see is I don't feel there's going to be a Santa Claus rally, but I'd like to see something around Christmas where the market goes into Christmas really as a dud, not too far down, but not up, because there's no Christmas rally amongst war. I'm not going to bet on Santa Claus this year, folks. That's for the brave, and I don't have the courage for it. So on that bearish note, I am so sorry to deliver this news. Hopefully it resonates, but I can't see anything. It is nice to have some level of vindication personally, but these are just my opinions. And I could tell you at the end of the day, AI has always beat me. Algorithms have always beat me. And so I'll still always make my bet with that. Aaron, back to you.
Thank you, Kelly. One follow-up question I think that everybody would love to know about is we've been advocating for the red oil and the conservative because they've been our front runners this year. Usually it's the balance or the aggressive that does really well, but this year conservative and red oil have taken the lead. How do you foresee this the rest of the year panning out for our two best performing smart folios? What should they?
Two things. Okay, good point. Red oil, I'm very sanguine of. The problem we have now with the conservative, it's not a problem. Conservative holds two things that are interest rate sensitive. One is the TLT. It will continue to own it because it's essentially conservative is really the 60-40 portfolio. It's 40% bonds, 60% stocks. Well, we're kind of out of stocks. So we might have a few of them, but they're oil orientated. So they're still okay. But it's those two things. 40% of that portfolio is still in a very dangerous area. Do you get out of it? No. In this case, in order to maintain a 60-40, you still have to hold on. They do provide dividends, however. Remember, they spin off the yield of the product. So even as they go down, if you look in your account under activity, you will see things coming into your account, money from the dividends of them. If the interest rate environment goes to 5.25, those two items will probably lose a little bit of value. But just remember this: they're still paying the dividend. The TBC is the other one. That if you look at that symbol, it's really a 5.5% note offered by AT&T. Yeah. It will always pay 5.5%, as long as AT&T is in business, and it is in business still. So I still like that. Why? Because at some point that will mature and you'll get all the money back on that product. Plus, it pays you the 5%. It's sort of like holding a bond. It's like, hey, if I'm going to hold it to maturity, what do I care? Now, 5% is also protection against the portfolio. That's why it's working that way. So we have to remember that even if you see the portfolio go down, if you add the dividends back in, it's not as bad as it may look. Red oil has obviously been a winner because the oil stocks have held up. I see those things doing okay. I don't expect oil to rally a lot more, but I think it's going to hold up better. If it was me, in my opinion, it'll hold up better as long as this Middle East conflict is there. And by the way, as long as we have a bad energy policies in this country, it's going to hold up. And we still have bad energy policies.
Awesome. Let's get into, thank you so much for that, Kelly. Thank you, everybody. A special thank you to everybody. We are 15 minutes past when we would normally sign off, and we have almost everybody still here tuned in with us. You may be staying tuned for this upcoming trivia that's doubly special this week. But I just want to express my gratitude to everybody that's stuck around to the end.
And thank you for tolerating me being late. I believe it or not, I'm a coder, but it doesn't mean I can remember every password.
Yeah, sometimes that happens. That's life. We do have a couple of questions, Kelly, that I do want you to get to, but let me just set up the trivia question first. Now, if you didn't already know, trivia this week is going to be a little bit extra special. A couple of weeks ago, our previous AI Circle, Kelly stumped everyone with his trivia question. So there was no winner. We're going to double up the prize. That's normally $25 worth of Amazon gift cards. We're going to double it to $50 for tonight's trivia question. So that's probably why everyone's still staying. I think, that's my hunch. So let's get to the trivia question. Without further ado, Okay, the trivia question for tonight is, when was the last time the 10-year note was at 5%? Okay, so you may have caught this in the headlines recently. It recently hit 5%. It's been a while since we've been here. How long ago was that? What year? I'm looking for the specific year. What year was the last time that the note was at 10-year note, excuse me, was at 5%. Now, while you're submitting your answers, we'll get to a couple of questions. But real quick, what do you win if you get this question right? It's the $50 Amazon gift card, of course. But how do you get it? You have to show us that you're also invested in at least one smartfolio. Okay, so just there is a little bit of a qualification process to earn your prize. So as we get our answers in, first one to get the year correct is going to be our winner for tonight. But Kelly, real quick, before we get into the rest of the questions here, why is this question significant? There's a reason you wanted to talk about this today. You're muted. We lost you.
Here I am. Sorry.
There you are.
I wanted to make sure you did your diatribe well.
Yeah.
The reason it's important is because the last time it was here was also a significant time in history. You're seeing in front of you, by the way, a chart of the 10-year note only for this year. The last time this happened, which someone will probably get right, was also a precursor to a deeper problem that we had, which was, well, I'll wait for someone to answer it.
Yeah.
It is a precursor, and that's why I asked the question.
Okay, so let's, in the meantime, get to a couple of other questions that did come in, and we'll have to fly through these because we're already late, as we all know. John Howard asks, what are your thoughts on Bitcoin today?
Bitcoin's going higher. Buy it at 31,000 if we get a dip. Okay. Only Bitcoin. Do not touch any of the others. Here's why it's going higher. Simple. BlackRock is going to make an ETF. What does that mean? It means basically the entry and exit costs of owning crypto will be much, much cheaper. Ultimately, with their ETF product that they'll have, it'll make it easy entry and efficient entry for everybody to participate in Bitcoin. No more 0.5%, 1% commissions in, and another 0.5%, 1% commission out. When that goes and we have an efficient market, everything will go up. And you might have noticed only Bitcoin really went up. All the other coins have not. Bitcoin is close to a 5-year, I think I saw it at a 5-year high almost. And I feel that the future for this is very bullish. We really do want to have some of this in our portfolio. Here's a chart of it right here. But if we go back, you can see we're making highs that go back to 2022. We're here, we got 1-year highs. Whereas if I look at, say, for example, Litecoin, we're nowhere. We are nowhere. And look at this. This is nothing. We're at new highs in Bitcoin, and we had higher highs earlier in the year in Litecoin. Ethereum, very similar. It's had its rally, but guess what? We were higher earlier in the year. These things aren't going because nobody cares. You own the Cadillac and you sell the Hugo.
Yeah, absolutely. All right. That's a great way to put it. Own the Cadillac. Okay, next question. Kathy Emmons asks, does iFlip then put a stop on selected stock trading? I think that she's asking about the AI, if our AI uses stops.
We don't use stops because stops can be triggered intraday. But what we do is say we take closing value. If a closing value is below our exit zone, we get out the very next day. We take the risk that the price of our stop is really kind of arbitrary. It's arbitrary in the sense that it generally will represent either support or some kind of volatility move off of some price. And so, yes, we do use stop areas, but not stops. Stops are generally, I found, to be dangerous in life, and that you might find often that you'll get a better fill if you just hang in there an extra day and just get out and say, I'll get out in the morning.
Right.
And try not to overthink it while it's killing you during the day. You say, oh, I know I should be out.
Right.
I get it. I understand that. But all the work I've ever done says, you know what? You can get out the very next day and you'll manage just fine.
Right. Right. So for most stocks that have enough liquidity, that is not going to be a problem. Stops are a very simple way to manage risk, but AI is a very sophisticated way to manage risk. So that is superior. So that's why we do it that way. Last but not least, we have CL Banks asking, can you offer reasonable interest rates for cash holdings, I guess, in this current climate?
The best thing to do if you have cash right now in your portfolio and you don't know what to do, you don't want to put it in anywhere, buy either one of these two symbols is a good representation of cash. The NEAR, NEAR symbol, it's a BlackRock product, or the USFR, if you're not, if for those people that are politically do not like wokeness.
Yeah.
So if you're BlackRock is a very woke ESG type company,
right,
and I have no problem with it. It offers about 4.75% right now on its paper, and it's an ETF that has 2-week maturing T-bills. I definitely would recommend putting it there and waiting for your opportunity in something else.
Yeah, there are certain people that just refuse to participate in anything associated with BlackRock, that's okay. You can invest however you want.
That's why you would buy the USFR.
Right. Yeah. Okay. Yeah, and we've actually had videos about mentioning that going back many episodes of the AI Circle. So thanks, CL Banks, for the question. And the winner for tonight, I think, also is CL Banks. The winner. The answer is the question was. Let me just repeat the question real quick. The question was, when was the last time that the 10-year note was at 5%? And the answer is 2007. Kelly, you mentioned that this was a precursor, and so I'm going to ask you to comment on that in just a moment. But that means that our winner for tonight is CL Banks, 1958, was the first entry. Of course, we have John Howard, who was close, and honorable mention also goes to Vivek, who was close, but CL Banks beat you to the punch. He pressed enter just a little bit quicker, and so congratulations, you are our winner for this evening. Now, how do you claim your prize? You have to show us that okay, go ahead, Kelly.
Let me just say, look, 2007, I think, if everybody remembers, that was the year right before the financial crisis, when the Fed had to lower rates. It was the same thing. 5% then, 5% now. We have now the difference this time is we have inflation. They can't really lower rates. They don't have the same ammo that they had before. The Fed always says, oh, we have all kinds of ammo. They do. But one thing they don't have this time is the ability to just ratchet the Fed funds lower unless they want to increase further inflation. So they have to make a tougher choice. 2007 was a bad time to be in the market. And I kind of think right now in 2023 is not a real good time either. That's why I chose that question for today. Go ahead, Aaron. If everybody's okay, though, I do have to jump.
Yes,
I have got a commitment at 4:30. It was wonderful seeing everybody today. Pardon, I did everything but pound the table.
Yep.
I'm doing my best to kind of alert everybody. And of course, because of this, probably we'll get some kind of monster rally. It ain't happening yet. All the best, everybody. Thank you so much for tuning in.
Thanks, Kelly. Thanks. And again, thanks for staying later than usual. So if you have any questions for Kelly in the future, and you have questions you want him to answer on the show, just email mailbag@iflipinvest.com or text us at 480-418-0575, the number on your screen. That also goes for you, CL Banks. That means that you do have to show us that you're invested in at least one smartfolio. The way you do that is you send us either your account number or a screenshot of your account to either, again, this email address that you see on screen, or the SMS text number that you see on screen as well. That will do it for tonight's episode of the AI Circle. Thanks so much to everybody who stayed on much later than usual to participate all the way to the end. We will be back next month. Again, it'll be the second Wednesday in November for the next episode of the AI Circle, which means November 8th. November 8th, we will see you then. Until then, good night, everybody.